The broadcast is now starting. All attendees are in listen-only mode.
Good morning or good afternoon, depending on what part of the country you're in. Thanks very much for joining us. Welcome to the itSynergy monthly Hacking the Human webinar series. And today, because of the time of year, we're a little bit more than a month out from that fateful April 15th date. We're going to be talking about avoiding income tax fraud and how to keep yourself out of trouble in terms of having your identity stolen when it comes to your income taxes. So let's go ahead and jump right in. First, just a little bit of background on itSynergy, why we're here. So we have what we call a why, and that is why we do what we do. What gets us out of bed every day, what makes us excited to come to work, it's our why. And for us, our why is creating positive experiences with technology. And so to talk a little bit about what that means, if you remember how it felt maybe like when you got that new smartphone for the first time, or maybe somebody showed you a really cool new gadget that did something you were excited about, or maybe somebody showed you a new trick or some way to get something done faster as a result of technology, that moment that happens right when you make that discovery where you kind of say to yourself, wow, this is really cool. That moment is a positive experience with technology, and that is why we do what we do. It's in order to create that feeling. So why are we here today? Why are we on this webinar? Some statistics regarding security and the human element of it is in 2014, IBM did a study that said that 95% of all security incidents involve human error. And in 2015, that was followed up with a couple of studies, one by CompTIA, which found that human error accounted for 52% of the root cause of security breaches. And Experian in the same year found that employees and negligence are the leading cause of security incidents, but remain the least reported issue. And so our goal in the next 14 minutes is to give you some quick action items to help you be security smart. What these studies show us is that the overwhelming majority of security breaches involve some sort of human error. And a lot of, in rare cases, that's intentional. Maybe you have an insider that's intentionally trying to cause damage, but in the overwhelming number of cases, it's simply a lack of awareness. And so that's what we're trying to change. And of course, those of you who join us on a regular basis know already that you can join us on the second Thursday of every month at 11:30 a.m. Arizona time for a new 15-minute topic. So let's jump in. Today's topic is avoiding income tax fraud. So aside from the time of year that it is, why are we talking about this? Why do we even need to have a monthly webinar on this? Well, let me share with you some statistics from the 2016 tax season. So these would be from last year. The IRS reported 42,148 returns with $227 million in claimed fraudulent refunds as of March 5th of 16. So about this time in last year's tax season, the IRS had already received over 42,000 fraudulent returns, and those returns claimed over $227 million in fraudulent refunds. Unfortunately, the IRS only caught about $180 million of those fraudulent refunds, which is just under 80%, and was able to prevent them. The other, a little over 20%, went undetected, and some bad guy got a little bit richer as a result. Part of those 42,000 returns is the IRS found over 20,000 potentially fraudulent returns that were filed by prisoners, so unlikely that a prisoner has any income and needs to file a tax return. So when the IRS receives a tax return from a prisoner, that's obviously a little bit of a red flag. And overall, there were $193.8 million in fraudulent refunds, which represented 31,578 returns prevented as a result of the IRS's identity theft filters. Now, let me share with you some statistics around the IRS's identity theft filters, and to me, these most strongly demonstrate why this is such a big problem. So in 2012, there were 11 identity theft filters used by the IRS. So an identity theft filter is simply a characteristic of a return that's filed that the IRS looks for and says, if we see this, there's a good chance that maybe identity theft is involved. By 2016, that number had grown to 183. So within a 4-year period, the IRS went from 11 characteristics they looked at to try to detect identity theft up to 183. So to me, that is a staggering number. And as of 12/31 of 2015, there were $6.8 billion in refunds that the IRS did not issue as a result of those identity theft filters. So fortunately, the filters are working, they're helping. We see that they're still not catching everything. But our objective today is not to have you be protected if a return is filed fraudulently using your identity, but instead to prevent that from ever happening in the first place. So you say, great, I'm in. What do I need to do? There are a couple of steps that you need to take in order to ensure that this doesn't happen to you. So the first thing is to claim your identity with the IRS. The IRS, in its infinite wisdom, one of the features that they make available to you is the ability to get a transcript of previous tax returns online. So you can actually pull up and look at tax returns that you filed for yourself previously online. Well, what the bad guys have figured out is that if they go online and they sign up for an account using your information before you do, then they become you to the IRS, because now they have a username and password that's associated with your username, and they can then request previous years of your tax return. What do you think they do with that information? Well, that gives them all of the information they need to not only steal your identity, but to also file fraudulent returns under your name. And not only can they file fraudulent returns, but they can file fraudulent returns that are very difficult for the IRS to detect, because they have all of this previous information on you, such as what your income was last year, who you work for, who gave you W-2s last year that provided you income, etc. And so because they have such detailed information, they can file a tax return that looks very plausible in your name, and you never have any knowledge. And so what you need to do to prevent that is you need to claim that identity for yourself with the IRS before the bad guys do. So you need to get an account set up for yourself on irs.gov. So how do you do that? Well, I have the address here. So if you go to irs.gov/individuals/get-transcript, that takes you to the site where you can request the online transcript of your tax return. So if you go to that site, there will be a button there where you'll click Get Transcript Online. So click that button to get your transcript online. And then on the next screen, there will be two choices. One choice is if you already have a username and password, log in with it. And over on the left-hand side, there will be a button to Get Started. It is that button that you want to press to start setting up your account. And so you'll go through the steps. You'll complete the registration process. They require quite a bit of information. To tell you the truth, the IRS had this feature available for several years, but actually had to shut it down for about a 9 to 12 month period, because there was so much fraud happening through it that they had to discontinue the service altogether. They have now made the service available again, but signing up for an account is more difficult than it used to be. And so you've got to have detailed information about yourself, name, social security number, date of birth, etc. They're also going to ask you a number of what they call knowledge-based authentication questions. So they're going to ask you things about, you opened a credit card account in 2014, what bank did you open it with, those types of things, the similar type of things that you get when requesting a credit report. And so you got to go through and complete that registration process. And then, of course, you've heard me say this on these webinars before, but when you do set up your account, of course, make sure to choose a very secure password for your account and store it securely. And if you don't know how to choose a secure password or how to store it securely, good news, we've got some previous webinars that tell you exactly how to do that. And so take a moment and go back and look through those. And then one other thing to note related to your identity with the IRS, if the IRS has sent you what they call an IP PIN, that stands for an Identity Protection Personal Identification Number. And that is something that the IRS will send you if there has been some sort of fraud or identity theft related to you, as an additional layer of protection to file your tax return. So not everybody has an IP PIN, but if the IRS has provided you with an IP PIN because you've had some sort of an identity protection issue in the past, you want to make sure that you protect that PIN just like you would any other highly sensitive password, because that PIN is going to be required to file your tax returns, and that's an important part of protecting your identity. So next up, you want to be able to recognize scams when it comes to IRS and people trying to steal your identity. The first thing to know is that the IRS will never, all caps, never contact you via email, text message, social media, or any other electronic method. In the overwhelming number of cases, the IRS is going to initiate contact with you by sending a letter to you. Now, they may ask you to call, or they may offer you the option to call to respond to that letter. And so at that point, the communication may happen over the telephone, but they are not going to initiate contact with you by emailing you, by texting you, any of those other things. And if somebody does call and claims to be from the IRS, by all means, feel free to tell them, hey, I will call back, and then hang up. Don't call back the number that they give you, but look up the number for the IRS office on irs.gov and call them directly. And if you get a letter and it's sent to the address that they have of record for you, which for most people is their home address, then you can assume that that is legitimate, because that is, for the most part, how the IRS establishes contact with taxpayers. And then, as I mentioned before, regardless of how people contact you, if it's not via that letter, do not believe anyone claiming to be from the IRS. And absolutely, if they contact you via some method other than a letter to your home address, you should be very suspicious. And if it's via email or social media or text, you know it's a fake. And so definitely do not respond to that. Another thing that you need to think about is sharing of your information when it comes to taxes. So this is the time of the year when a lot of us are collecting all of our information. We're getting our receipts together, we're getting our W-2s together, we're figuring out our medical expenses, our charity deductions. A lot of us fill out worksheets for our accountant that tells them everything that we did during the last year, and we're preparing all this information, and we're getting ready to give all of that to our accountant. So number one is, do not send any of that financial data via email. Email, we've talked about this on these webinars before, is not a secure method of communication, and so that's not a way that you want to communicate with your CPA. Don't just send things via email. And then it's also important that that works in the reverse as well. So you also need to tell your accountant, don't be sending anything to you via email either. So your accountant needs to be just as aware of security as you do, if not more, and I would argue they probably need to be more aware. And so just like you're not going to email them information, tell them don't be emailing stuff to me either. Instead, you need to use other methods. So if you have encrypted email available to you, that's a way that you can communicate with your accountant. Of course, hand delivery is always an option. You can just physically take the information or mail it to them. Or some accountants will provide a secure portal for you where you can upload documents to them directly into this secure portal. So, of course, it's a whole different discussion about making sure that that secure portal is actually secure. And we've got some of that information in our other webinars, but that might be another way to do it as well. You also need to have a discussion with your employer. And there are a couple of things you need to talk with about your employer. Number one is make sure you know about any data breaches that have occurred. So your employer obviously has a lot of information that is very useful to identity thieves if they wanted to steal your identity. And so you need to have that conversation with them and make sure that if there have been any data breaches of their system, that you're aware of that so that you can take action to deal with that. Secondly, one of the most popular ways that identity thieves are stealing information and filing fraudulent tax returns is what's called W-2 phishing. And so what that means is a thief will impersonate someone from your company, maybe the president of the company, and request that a copy of all employee W-2 forms be sent out. Believe it or not, on the black market, your W-2 is worth somewhere between $4 and $20 to an identity thief because they can use that to file a fraudulent tax return and steal your identity. And so you can imagine if you have a relatively small company, let's say 1,000 employees, and I can convince somebody at that company to send me a copy of all those W-2s, that's potentially $20,000 worth of information that I've just gotten out of you. And in small companies like that, a lot of times some of the protections aren't in place that larger organizations have to prevent somebody from sending that information out. You also need to watch for signals. These are some of the guidelines that the IRS gives us in terms of what might be indicative that someone has stolen your identity. So obviously if more than one tax return has been filed using your Social Security number, I think it almost goes without saying that that's a big red flag, that there is definitely a problem. Also, if IRS records show that you have received wages from an employer you didn't work for, that is probably a problem as well. So that's something to look out for. And then as I mentioned before, you also need to have the conversation with your accountant as well. So the IRS puts out a publication. Of course, the IRS numbers everything. So IRS publication 4557 is intended for tax professionals. So it's intended for your accountant, CPA, etc. It's called Safeguarding Taxpayer Data. It's about a 20 or 30 page long document. that you ought to make sure that your accountant is aware of, and you ought to make sure that they are taking all of the measures described in that document. So if the worst does happen, what do you do? How do you respond to that if you find out that a tax return has been fraudulently filed in your name? The first thing you want to do is file a complaint with the FTC, the Federal Trade Commission, at identitytheft.gov. That site is set up as a place where you can report that the identity theft has occurred. The next thing you want to do is contact a credit bureau. There are three big ones: Equifax, Experian, and TransUnion. And you want to place a fraud alert on your records. There are laws and regulations in place that specify that if you contact one of those credit bureaus and place a fraud alert on your records, they are required to communicate that with the other two, so you don't have to contact all three. You can just contact one of them and have them place a fraud alert on your records. And then finally, you want to complete IRS Form 14039, which is an identity theft affidavit. And that will alert the IRS that the identity theft has occurred, and then the IRS will take some action in response to help you protect your information and ensure that your tax returns have some additional security protections going forward. One other thing to note is that it is important that you continue to file and pay your taxes even if some sort of identity theft has occurred. As we all know, the IRS does not take kindly to us not paying our taxes, and they will not excuse that even if your identity has been stolen. So important that you continue to file and pay your taxes while you get everything sorted out. So we are just over 15 minutes, so thank you very much for joining me. Our next webinar will be April 13th, which is the second Thursday in April at 11:30 a.m. Arizona time. You can register for that webinar right now at itsynergy.com/webinar. Next month, we're going to be talking about social engineering, which is one of the most popular techniques that hackers use in order to compromise you and your systems. And so we'll teach you how to recognize that, and if you can recognize it, you can avoid it. Our webinars are, of course, the second Thursday of every month at 11:30 a.m. Also, a brand new announcement that you have not seen before is that you can now subscribe to our YouTube channel, and we are publishing all of these videos out on our YouTube channel. So itsynergy.com/YouTube will take you to our YouTube channel. When you're there, please hit the subscribe button so that you get notifications when we publish new videos. I know there were a couple of you that reported some technical difficulties last month. We will have last month's video out on that YouTube channel by the end of this week so that you can look for that. And then this video will be coming out sometime after that. So thank you all very much for joining us, and we will talk to you on April 13th at 11:30.